What are you seeing from the IMF in terms of the stresses and the strains that this is producing, as well obviously as the benefits it's producing for the global economy?
Well, I think what we do first is try to analyze where it's coming from, whether it's a supply or demand effect. And in the present circumstances, what we're seeing is that it's predominantly a supply, 80-20, 80% supply, 20% demand. So that's pretty good news. Then we look at the aggregate effect that it's going to have on the global economy. So if I was to address an audience in Saudi Arabia, Qatar, or Kuwait, I would probably not look at it exactly in the same way, because there will be winners and losers. But on a net basis, it is good news for the global economy. And we have a rule of thumb that is based on a lot of modeling and analysis of what is taking place. But essentially, if we have a 30% decline, and we have a bit more than that, I mean, assuming we have a 30% decline, it's likely to be an additional 0.8% for most advanced economies, because all of them are importers of oil, whether you look at US still, Japan certainly, Europe absolutely, China a big driver of growth. All of them are net oil importers. So if you add another 0.8% to each of those countries, probably only 0.6% for the US, because the effect is less critical for this economy, it is a net booster on an aggregate basis. So winners and losers, granted, the exporters are taking, a hit. For some of them, my assumption is that it's a calculated hit, but net, it's good.